Hello, my name is Jacques Steenkamp. I'm the CEO of EOACC. We are accountants and business advisors. We are also the guys that create the Tax Dash, which is an advanced personal tax planning tool. We also use that to process and submit our clients' personal tax returns. Right, today I'm going to look at interior designers and going with a real example, show you how the VAT will be treated when the business needs to register for VAT, and also give you some tips about what you can do in your financials and in your books to streamline your bookkeeping. It is generally quite a complex business just because the number of variables involved where an expense can go to a couple of different accounts. So again, structure and putting in processes in place and documenting it all and making sure everybody knows exactly how it works is super, super important in this sort of business to not lose track completely. But let's go into an example and have a look what I'm talking about. Firstly, whenever I deal with interior designers, I know they like to look at pretty things. They don't like financials. They don't like numbers, these sort of numbers. They don't like accountancy, generally speaking. They like pretty things. So I like to bring in colors as much as possible. If you don't like my colors, don't hate me. I'll tell you my logic behind it. So in this example, I thought, okay, let's make all your income blue, the sky, which is above. Let's bring it, let's make all the expenses like an earthy color, like brown. And then, if the sky is much bigger than the earth, the ground, then we should have nice, big, fat profits, and money is green. So profits is green at the bottom. So that was my logic behind picking these colors. Right, so key thing, absolutely super important. These descriptions of the accounts, we in accountancy, we call it our chart of account or our general ledger. So this would be your profit and loss, all the different things that you call those. The descriptions for all of these are super, super important. Like when you open up a new zero account or go into a generic accounting system, they will give you generic accounts. But it's super important that you go and sit and spend time on your list of accounts. Make sure you understand the description, change it to something that you understand, and then put a further description for each of those accounts to make sure you properly document what should be allocated to each account. And that's going to help. The bigger your team, the more important those sort of things become. Absolutely. If you're a one-man band, maybe you don't need that sort of level of detail. I would still encourage you to sort out your chart of accounts and get these descriptions properly, because even when you register for VAT, it just all adds complexity. So just to quickly run through the example, the list of accounts that I've got in my example here. I've got design, project fees, reimbursable income. This is a very, very important account in this sort of line of business. You need to differentiate whether you've got disbursements or reimbursable. And it becomes very important when you're doing that. We've got a blog post on our website that explains the difference between the two. But majority of the time, the interior designer that I'm looking at this example will most likely be an interior designer that go and decorate and make a house look pretty, who's going to buy products and put it in, and goods, and to make it look amazing. So reimbursable expenses will be things like travel expenses and those sort of things that you incurred that you're going to charge onto the client. In this example, and it's a very simple thing that a lot of businesses do. They call the account reimbursable, but you're going to have a reimbursable income account, you can have a reimbursable expense account, you can have a reimbursable for your employees as well. So you need to think about what you're going to call it so that you know when it's an income account, when it's an expense account, when is it the admin account, just to show an example. Handling fee, so if you're charging handling fee on the products that you bought, call it a handling fee, and then that your income can go into that account, or that it can be allocated to that account. And then this one is procurement product income account. And if we just scroll down and have a look at the cost of sales, which is, you'll see I've got two accounts there for products bought, procurement products bought. This normally will be one account, but I just wanted to split it out to show how we will treat procurement products that we bought that don't have VAT on compared to ones that's got VAT on, but that will be grouped into one account. So what you're doing, you're buying this beautiful lamp for £1,000, you go and put it into the house. So when you bought the lamp, it will be sitting here. Let's say there was no VAT on this lamp. And then obviously you've got to bill the client for that in one shape or form. I don't know how you're invoicing, whether you do it out of your operational system, like something like Estimac. You're going to bill for that. You're going to bill the client some shape or form for that lamp, and then it needs to go into there. Yeah, this is all VATable supply. So really, just remember this number. So when we bought this product, it was actually, the invoice said it was £7,000 worth of goods, and then they were charging us VAT on top of it, which is 20% of it, which would have been £1,400. So the total invoice we had to pay the supplier was £8,400, and £1,400 of that was VAT, and the actual goods only cost £7,000. But when you're not VAT registered, you need to record all these transactions at what the total amount is that you paid. So all these amounts will include VAT where applicable, or will be excluding, but it will be the total amount. Very simple. Okay. So here I've just listed other expenses. So these will be reimbursables. A simple example will be a travel expense that needs to be allocated to a project. So create a reimbursable expense account. That's when you bought for the taxi or whatever. And then this is where you're going to bill back to the client. So as you can see with procurement, that actually matches that. In theory, this is what should happen. So when you incur an expense that needs to be reimbursed, you need to bill it back to the client as well. Obviously, then you have courier cost that will be directly related to a project, and maybe photography cost. And then if you scroll down, you'll also have your other general administrative expenses like salary, courier cost. This will be office costs. So when you had to, it's not directly to a project, you had to just courier something for the office to a supplier, or you're developing a new product, or whatever that may be. And then obviously your marketing expenses. So in your profit and loss, how this is going to look like, so you're going to get your income, right? Total income, total sky, less total ground, less all those ground expenses, the nasty ones, and then it's going to give you the profit. Income, less expenses gives you profit. The company will pay corporation tax. So this is if you're set up as a limited company, the company will pay corporation tax on that profit before tax. And then that will be your profit after corporation tax. And if you're the business owner or the sole shareholder, then that is the amount that you can pay out as dividends to yourself. And obviously you need to have retained income to be able to pay out dividends. All right. Okay. I hope I'm still making sense here. So let's go and have a look now what this will look like when you are VAT registered. I think I'm just going to have to move. I'm just going to kick myself out of the picture for now. We don't have space. So this is what your profit and loss now will look like. This column here, this is what your profit and loss is going to look like if you are VAT registered. It's important to note that when you are VAT registered, VAT is not your money. So you are becoming like an agent to HMRC. So, and what you're going to do is you're going to have to charge VAT on all your invoices of income that you raise to your clients. You have to charge VAT on all of that if it is a UK client. And all the VAT that you paid over on your supplier invoices, that's what you're going to deduct again. So in your VAT return, this is what we call a control account in accountancy terms. So this is where we record all the VAT. But in your profit and loss, and I'll get back to that, but in your profit and loss, it's all the excluding VAT amounts that you will show there, because it's the excluding VAT amount that's yours, either your income or your expense. Okay, but I'll get back to the VAT account. Okay, so you're going to still bill the client for the design project fee. That's your income. You're going to add 20% on that. That's the total amount the client now needs to pay. Same with the reimbursable. You've got to charge VAT on that if it is a reimbursable. And it doesn't matter if the reimbursable expense was a travel expense that you incurred that did not have VAT on. If it's qualified as a reimbursable, you have to charge VAT back to the client when you charge that on. Handling fee, we have to charge VAT on that. Procurement product income account. Remember I said this 8,400 had £1,400 of VAT. So I've split it out here. And so £7,000 is the expense. Now £1,400 moved to that column. We only record excluding VAT amounts in our profit and loss. And again, these two amounts will match with that exactly. Okay. So that's all the VAT received that you receive from your clients, 3,720. Here I've just split out all the other expenses between excluding VAT and VAT. Obviously, you can only claim VAT back if you've got a valid VAT invoice, and it's VAT paid in the UK on these expenses. Okay, so this is now going to be, so it takes all your excluding VAT amounts, and it will work out what your new profit is in the business and work corporation tax. So same formulas apply. This control account, the VAT control account, is something that it's normally kept in your balance sheet, in your books, and it will summarize all the VAT received from your customers. It will deduct all the VAT paid to your suppliers, and when you need to do a VAT return, it will summarize that all for the period, and it will work it out how much VAT needs to be paid over to HMRC. So in this example, if you take VAT received, less VAT paid, less that VAT paid, you see, okay, you have received a total net amount of 2,120 VAT, and you've got to pay that over to HMRC. It could very well happen that maybe you didn't bill the client, but you had a lot of purchases in one period. So your purchase was actually more than the income that you received, and therefore you can make a VAT claim from HMRC. So it goes both ways. Like I said, you're just an agent for VAT. What you've received, what you pay over, get the net amount, pay it over, or claim back from HMRC. And this column is just to show you what the total amount will be, including VAT. Right. I hope you're still following me. So in theory, this is what it should look like. And, just explaining what the back end of the transactions. Where it gets further complicated with interior designers is there are a lot of things that causes timing difference, because they normally deal with a lot of pro forma invoices, they pay deposits for products, and then if you use a operational system like Estimac, you will record all of that very differently compared to how it will be recorded in your accounting system. As an example, you may record in Estimac, you will say, or any project management system, you say, I've received £100,000 deposit, and now I can go and buy products. In Estimac, you will say £100,000 received as a deposit, and then you start buying stuff and adding VAT on all those products. In the accounting system, or for VAT purposes, we will treat that £100,000 as income received. You pay the total VAT over as soon as you've raised that invoice or received that money, and then we will claim back the VAT if the transactions had VAT on or not. And then where there's a difference is because we can't claim VAT back on pro forma invoices. We don't record that pro forma invoice necessarily in your accounting system. Also, in your operational software, you may record when you paid the 50% deposit of a total amount, but you only record the deposit. And now you got the whole invoice. As soon as you record that in Xero, or your accounting system, it's going to record the total amount of that invoice. So that causes a lot of timing differences between this procurement income and procurement product accounts. So the challenges comes in when you need to draw up your annual financial statements, your annual accounts for your company, which you need to do once a year. We need to match the income with the expenses. And this is where you need to do a reconciliation between what's in Xero and what's in your operational software. And we can do accounting entries and remove that and say this is a expense paid in advance, or this is income received in advance. But we obviously need to know, we need to calculate that. And this is why you need to do a reconciliation between the two systems to get these to match. To take a very, very easy, simple example to explain this. So let's say your company year end is the 31st of March every year. On the 30th of March, you raised an invoice to a client for £10,000 for goods that you need to go and buy from. So you raise an invoice for £10,000 on the 31st of March. You only go and buy those products in May, so a month or two later. If you don't do those adjustments or the reconciliation, you will have £10,000 income here. You will have no matching expense in that financial year, which is going to inflate your your income. and it's going to massively increase your profit, or not mass, but £10,000. It's going to increase your corporation tax. But not only is it going to cause you to pay corporation tax sooner, because in the next year, you're not going to have the income, but you're going to have the expense in the next period if you don't do the necessary adjustments. So not only are you going to be causing you a big timing difference in the tax that you will pay, but you also don't have a actual real-time view of how your business is doing, because there's a mismatch between the income and the expenses in your business. So again, super important to do those reconciliations. It's probably a lot easier, or it is easier if you're a one-man band, if you're working on one project, but the more interior designers you get, the more projects you need to keep an eye on it. It's also good to do a check between your accounting software and the operational software, because we reconcile everything back to the bank account in your accounting software. So there are a lot of checks and balances that happens in accounting software, and we balance back to the bank account. So you can also pick up, what if somebody had bought a product and forgot to put it into the operational software? By doing these reconciliations, you can pick up a lot of mistakes like that and make sure everything is correct. I hope you can understand now. It is complex, but if you break it down and have procedure and structures in place, then you have to in this sort of business. It really makes a huge, huge difference. I would also say there are a lot of tools out there, amazing software solutions that you can use to let the designers speak to your bookkeepers, whether they are internal or outsourced. We do quite a few fully outsourced financial function for interior designers. So it really depends on your setup. But what you want to do is create a process or use these tools so that the designers can very easily communicate with the bookkeepers, that they know where the transaction should be allocated. That's super, super important. Otherwise, if you fall behind, it becomes really, really difficult to go back and backtrack and keep asking who paid for this and where was it paid for. And like I say, there are a lot of different solutions that you can do to automate and streamline that process. First thing, I've got to reiterate it, go to your list of accounts and make sure that is correct. It's in any business. I cannot stress it enough. It is so, so, so important to get that's your foundation right. So that's always going to be first step. I hope that was useful. If you've got any questions, then please feel free to get in touch with us. Thank you so much for listening. Appreciate it. Thank you.